Namaste and a very warm welcome to our channel, Rusty Traders. I hope you and everybody in our family had a great Diwali. So, on that note, with the same gusto, let's start. I hope by now, if you would have seen my screen, you would have understood which indices are we going to talk about today. We're going to talk about finnifty. And the reason we chose finnifty is that since the past few weeks, especially on its expiry, its behavior has been very erratic. And especially the option sellers have been challenged, to say the least, in making some profits if they are using something called as short strangle. When we say short strangle, just to give you a brief, it is when you sell equal quantities, maybe not equal quantities, maybe you're selling a put and a call of different strike for the same expiry. So what I have done is I have tried to understand the market behavior of finnifty on the 5th of November, which is today. And in regards to somebody who is selling options and that too using short strangles, what are the challenges we have faced today? The idea of this video is to explain you two things. First thing is that you have to be very careful while selling options. It is not that you sell options and you can just go away from your screen and just sit idle. No, things could go wrong in a jiffy and you might easily burn a hole in your pocket. That is the first thing. Second thing is that this is just an effort to understand as to sometimes market or the prices that you see on the screen could go very erratic. And on account of that, especially for this indices, there is no point in sitting in front of the screen for let's say from 9:15 to 3:30. It could make sense for you to sit, like, let's say away for 45 minutes, 1 hour, see how the market behaves, and then probably enter once the option prices settle down. Sometimes what happens is, let's say if you wait for 1.5 hour, especially for people who are doing short strangles, they might feel that premium has already decayed and they have lost. So that is an opportunity cost that you should be willing to pay as far as this index is concerned. All right. So this is just the 15-minute chart starting from here. Yeah. So this is just to explain what happened today. You can just see the screen. We'll come back to the chart as we move along. I'm just moving to the Excel sheet that you've prepared. Now, what does this Excel sheet contain? It contains time for every 15 minutes. This is the rate of the underlying. I have chosen finnifty to 23,450 put and 23,750 call with the today's expiry. The time that is given here and the rates that are shared here are at the end of the particular time that is given. For example, if the time is 9:30, the rates are at 9:30. So 23,624.8 was the rate of the finnifty cash at 9:30. Similarly, 23,450 put option at 9:30 was 27 rupees 55 paise. 23,750 call was at 38.95. Now, what does a trader who is adapting short strangle do? He's selling, let's say, 23,450 and 23,750 call, gathering a premium of 66.5. All right. Now, what he expects is that if Nifty closes between this wide range of 300 points, which is more than 1%, he'll be able to capture all the 66.5 and he'll go home. That is his basic expectation. Now, let us understand what happened today. We'll try and understand as we go along in terms of a leap of 15 minutes, right? So this is what has happened at 9:30. Now, let's say 9:45. Finnifty went down to 23,585. So as the market goes down, the normal understanding is that there is a rise in the puts and the call decreases. So the same thing happened. The put, rose by 6 points. Call went down by almost 10 points, giving you a net gain of 4.5 rupees. So it's like, okay, now the short seller thinks, the trader thinks, who has adapted short strangle, thinks that his things are working for him well, right? And he stays. He doesn't get out. Now another 15 minutes. The market has not gone anywhere. It's like hardly 50 paise, 40 paise, right? But still, if you see, put increased by what, 2 rupees, call dropped by almost 3.4, 3.5. Again, another 1.8 rupees made. So here by in the first half an hour, a trader has made almost 6 rupees, more than 6 rupees. Now another 15 minutes, another 23 points, and points increase, and that is the put went down, the call increase. Now if you see, now this move just started happening. The put went down by 4 rupees, but the call went up by another 6 rupees. So now instead of making, right, there is no further erosion of premiums on a total front. Okay. Now another 15 minutes at 10:30. If you see, this is what I meant by erratic moves. 15 minutes and over 100-point move on finnifty, on account of which the call went to 65, the put went to 16. So a drop in of 15 rupees on the puts, while a humongous increase of 35 points, giving you the total premiums of 81. Now we have started making losses. Now you have entered at 66.5. Anything above 66.5 is your loss. Now generally you would not even imagine, right? 15 minutes, 100 points. I mean, yeah, that is something that is, happened in the markets, but the frequency of such moves happening has increased like quite erratically and quite frequently. So now from 10:15 to 10:30, an increase of 100 rupees on Nifty. Now in the coming 15 minutes, it dropped by 160 points. This is what I'm trying to explain by erratic moves. It is becoming very difficult for people, for traders to trade in this particular index. One 15-minute set, increase of 100 rupees, another 15-minute set, drop of 160. So you would not even, you would not think, right, what's going on. This is where the option buyers also go for a toss. So another, from 16, it went to 57, from 65, it went to 25, probably from 81.1 to 82.6. Now, this is what I wanted to point out. At 11 o'clock, there is an increase of 5 points, just 5 points on the Nifty. Now see, the price of the put has increased and the price of the call has also increased, which is what I am trying to explain. It is very, very erratic, and I don't know how it happens. If you know, you can just share it in the comment section. If you know, yeah, everybody, might comment and say that it is because of the IV, but then I don't think it is only because of the IV. Probably something else, gets taken over. And I've seen this happening since the past 3 or 4 expiry. So if somebody knows, please share the same. So from 62 to 31, right? 93.7. So the seller, the trader has already started making losses here. 11:15, an increase of what? Almost 60 points. Again, another 15 minutes, another 63 point move. A drop of what? 12 rupees and an increase of another 12.5. Net change is negligible. Now again, in the next 15 minutes, 70-point move on the downside. So the put went from 49.55 to 73.1. Whereas the call did not decrease by an equivalent amount. Now what we are trying to show here is that at 584, 23 at 10 o'clock, this, okay, and 514, there is a difference of 35 points. But then 1.5 hour time decay should also have happened. So from 35, it went to 73. Okay. From 24.8, it went to 37. Now is it something that you can digest? How can both the call and the put increase when there is a drop in the underlying? This is something that I don't know how does it happen. How did it happen? For a trader, he's sitting in front of the screen and he's not able to digest, right? Something that was trading at what, 23,584, he went and sold and collected a premium. Let's say somebody took a trade at, let's say, 10 o'clock. And at 11:30, he is like, okay, now the price has dropped by 35 points. Now, I should probably, the price of the call should at least be lesser than 24.8. One is that the underlying is down by 35 points. And another thing is that 1.5 hours has already gone. So the time decay, which is theta, should also have happened. Instead of that, it has increased by a whopping 13 points, almost 13 points. Now, we don't know I don't know what adjective to use, but this is what I wanted to show you here. And then again, if you see, right, from another 15 minutes, another drop of 100 points. So the put went from 73 to 119. And if you see, the call is at 27.35. At 584.85, it was 25. And at 130 points lesser, 125 points less. It's still quoting more than what it was quoting at 584, 23, 584. So I don't know how does this thing happen. Now, very important thing is, let's say, let me mark it here. Let me mark this. Okay, now see. Now let's say somebody did not come here. He was not there in the market. Let's say he woke up late and let's say quick 11:30, he turned his system on, and 11:45 is like, okay, let me take a trade now. Now see the beauty here. Now at 11:45, let's say somebody has taken a trade. Okay. Now if you see at 423, 491, see the price increased. The underlying rate increased from 459 to 491, which is 30 points. But the price of the call dropped here from 27.35 to 23.65. The price of the put also dropped. Okay. Now, if you see from 23,491, it went to 23,486, which is a drop of another 5 points. Okay. So in this case, the price of the put did not increase. It still went down by another 7 points. The call anyways vanished. The price by 2 points. Another drop of probably 18 points. And the option price is again increased. The prices of the call drop. So what we are trying to say here is that if you see the same move here, I don't know if you know this, right? It's becoming very difficult to understand such moves. Now, if you come from 12:30 to 12:45, an increase of 70, 55 points. The put dropped, the call increased, and so the total premium is 100 points. So if you see somebody would have entered at 11:45 and closed at 12:45, 46 points to be made. Same here. From 23,526 to 23,540, another increase of 14 points, but still the call prices dropped in spite of an increase. Again, I don't know if it is because of the IV getting a bit settled. I really do not have any idea. The put anyways will decrease by common behavior, but then the call also dropped here. So I don't know how does this thing function, giving you a net option premium or total option premium of 90.45. What is important to know here is that if you would have entered here at 66.5 expecting that you'll make money, right, at 23,624 you have entered and you are at 23,540. See the difference. You have still not made anything here. You are still suffering losses. Okay. So it is not that an option seller always has, the liberty or has chances of being profitable every time. Sometimes certain moves like this happen, and wait till you see something fantastic that happened. today. And 1 o'clock, 1 to 1:15, another 12, 13 point increase, and another drop by 14, 15 points on the Nifty. See, this is the beauty, right? The underlying has increased by 12 points, whereas the option premiums have dropped by 14 points. More than that. Similarly here, the call price has increased by 2 points again. So giving you a net or total premium of 78.2. Now see the beauty. 11:45 you would have entered 146.45. At 1:15, after 1.5 hours, you would have made a whopping what? 68 rupees. Okay, now see what happened. Let me go back. Okay, till 1:15, everything was good, right? At 66.5, you would have entered, you are making a loss of 12.2 rupees. If this was what you were terming as crazy, wait until you see what happened. Now see. This is at 1 o'clock, and see what happened at 1:15. Here the high was 579, 23579, which is the closing. And here, just 5902. Okay, 320 points move. Okay, these are the closing rates. What I was discussing was the high and low. 320 points move. An increase of 320. Probably breakout that happened on the charts of Nifty would have ensured or caused this kind of move on the finnifty also. Can you just imagine the difference in high of a 15-minute candle is 320 points? On account of which, if you see, the 23,750 call, which was OTM till 1:15, at 1:30 it became in the money. And this, everything went for a toss. So if the 146.45 guy would have taken a trade at 11:45, if he would not have closed at 78.2, he would have suffered a loss. And as you know, as it was a breakout, right, it just went on snowballing or increasing to such rates. You see, right? These are the rates. So the poor 66.5 guy, if he did not know something called as adjustments, he would have suffered humongous losses unless and until he would have adhered to stop losses and proper risk management. So what I am trying to tell you here is that if you see certain instances that happen at 11, 11:30, I personally have not seen such erratic moves happening every 15 minutes. This has happened, or this keeps on happening in finnifty compared to other indices. First thing. Second thing is at 11 o'clock, if you see, right, for a 5% increase in the underlying, both the call and the put increase, which I have not seen for a very long time. It has happened, but it happens only in this index. As far as I know, I could be wrong. Probably you could share your views in the comment section. And hence it becomes very difficult for a option seller who is using short strangle. He is expecting a decay in the premium as the time goes on, at least in one of them. The whole idea is that if the market goes up, the call will go up, but then the put will come down. But the rate, let's say if the call goes up by 5 rupees, he's expecting a dip of, let's say, 6 or 7 rupees for him to make some money. And overall, as the time goes, he is expecting normal moves or sideways move. He's not expecting such crazy moves. So if you see today's market's behavior, right, from starting from what, 11 o'clock? No, from 10:15, it was all wavered, probably telling us what is lying ahead. So that was one thing. Second thing was at 11:45, if this person would have entered, he would have made great profits if he would have closed his position. If he would not have been greedy, if he would have been like let me make 10, 12, 20, 30, 40 points, it's a great number. But Still, if he's like, let me make 100 points, no, he would have gone, and he would not have made profits, but he would have suffered enormous losses, provided he would have, he did not have stop losses or any risk management in place. So this is what I wanted to share with you in this video, that if you are using short triangles, mind you, I had this humongous range 23,450 to 23,750. It's a 300 point range, and you don't expect something like this to happen. Okay. You see the moves 23,624. These are, mind you, these are closing prices. So 624 to 2403, or more than what? 1.2, just on the basis of the closing rates at 930, 330. These are not small moves. Okay. But if you see at 66.5, if I would have entered, I got an opportunity to exit probably till 10:15 only. At no point was I able to get out if I would have waited for a 15-minute slot to get out. So as you all know, we learn everything using examples. Such was the move that happened today on the 5th of November in finnifty. Mind you, be very careful while trading this index. It's better to go and trade in Nifty because the volatility is there, but not to such an extent. In the sense, you get to have certain, acceptable market behavior, unlike this that happened at 11:30. And it's not something that is new. It is keeping on happening. It just keeps on happening. So if you ask me, something that I reiterated at the start of the video is that there is no point, or there is no need for you to sit at 9:30 and start trading. As you saw here, right? At 11:30, at 11:45, if you would have come and waited till 1:15, again, you would have made money. But yes, such kind of erratic moves, and you would have been stopped out if your stop loss was 30, 40 points. Okay. So timing the market is very important. But as far as this index is concerned, I think it makes sense to enter after 12 o'clock. When I say after 12 o'clock, because if you see from 9:30 to 12, as far as this example goes, nothing sensible has happened here. It is like so crazy. The moves are like so, wide. If you see this 20, 30 point stop losses don't mean anything here. Okay. So from 16 here at 10:30 to 57.5, you would not even imagine, right? A 16 point option moving to 57 at 10:30, probably after 2:30, 2:45, even 3 o'clock, such moves are acceptable. But it has just been, the market has just been steady. Probably if somebody who, tells you that this, you should take a trade at 10 o'clock after the first 45 minutes. This kind of moves that happen, they're like quite, I don't know what kind of adjective to use here, but they are very challenging for a option seller. So he should be ready with all the adjustments. And most of all, he should be able to bite the bullet and say today it was not his day. If the SLs are getting hit, they're fine. Get out, make way. Market's not going anywhere. So on that note, I hope you would have gathered some information that is very useful for you as far as your trading journey is concerned. Please let me know what are your thoughts in the comment section. I don't have all this, UI, beautiful UI and all those things, but I just hope that my thoughts and my views are able to help you in some or the other way as far as your trading journey goes. On that note, thanks a lot for watching the video. Please like, share, and subscribe to our channel, Master Traders. Namaste.